Hello, good afternoon. It's summertime again, and many people are going on holidays. Yes, we believe that something quite big is happening in the markets. Interest rates are rising again. We'll go onto a FinGraphs platform and look at the 10-year US swap rate on the weekly chart or the perspective over the next few quarters. From mid last year, interest rates shot up quite aggressively in a historical reversal, and they had been retracing since the spring. We believe that they are now back in an uptrend, and that this uptrend has quite a bit of potential towards year end, possibly above 3% and even above 3.5% over the next 6 to 9 months. Looking at the daily chart, we can see the consolidation that we have had. It's been relatively shallow, and now it seems like the trend is moving up again. In first instance, it would be interesting if we could take out previous highs around 256, and our targets, impulsive up, are showing that over the next few months we could make it above 260. Our risk index was quite low and has started to reverse up also. Looking at the hourly, we've had a very nice and impressive first move, more than 20 basis points, and it is slowly getting into its targets. So we believe that it could push into the 235, 240 over the next few weeks, and then we should probably see a bit of retracement into August. The summary is that of all three bulls. So we are in a potential continuous uptrend. So the weekly is resuming up, the daily is resuming up, and the hourly still has a bit to go. Could see a bit of retracement into the end of July, but in essence is now positioned in an uptrend. Moving on to bonds, and we look at the Treasury Notes futures contract, and we can see that this picture is similar in reverse. We can see that the weekly chart is in a bear. It had moved lower towards the beginning of the year into its corrective targets, had a rebound, is now moving back. It would need to test its corrective targets down, or the lower end of it, towards 121.60, and go through it to confirm the acceleration to the downside we expect. The daily seems to be underway to do so. It had a reaction up. Our risk index has now turned, and it is moving lower, and our impulsive targets are projecting levels between 122 and below the levels we've seen here previously into the lower 120s. Now the hourly, shorter term over the next few weeks, has had a very nice move. It still has a bit to go, but could also bounce towards mid-July into early August. Now looking at the situation in Europe, it is quite similar. We look at the Bund here. The Bund is still theoretically in an uptrend on our weekly chart, but we could say that this uptrend is faltering with our envelopes, which are slowly flattening. We could also see that the risk index was overbought and is slowly positioning itself to the downside. Now if we look at the daily, we have confirmation that the correction up has probably come to an end, and the targets we see to the downside are also quite aggressive. We're currently slightly above 160, and we could make it down into the low 150 levels. Low 155 levels, sorry. Then the hourly is also heading lower, and it's probably approaching over the next week or so an intermediate bottom. We could also see a bounce towards the end of the month, but in general we believe that the long-term uptrend has reversed and is going to accelerate to the downside. Now looking at some sector exposure in relation to this interest rate move, we look at the relative chart of financials versus the S&P 500, and the chart is very, very similar to interest rates. We can see that the weekly had a very strong move up late last year, has had a strong retracement, and is now moving up again. And it should continue to do so probably towards year end. The daily saw its consolidation down, which has now reversed. We're back in a bull. The risk index was oversold and now moving up. The hourly has had a very nice first move up, probably another week or so to go. Bit of correction into end July, but then in line with the daily and the weekly should continue up. On the reverse side, we look at growth stocks, and especially the Nasdaq here versus the S&P. The Nasdaq usually benefits from lower interest rates and would suffer from rising interest rates or rising interest rate environment. And we could see that although it is still in a bull, that bull is very, very stretched. We could see both our envelopes are touching each other. The targets up on the weekly chart had been achieved, and the risk index is in overbought. So for the second half of the year, would probably favor rotation out of growth stocks and back into financials and possibly cyclicals. The daily is still in an uptrend, but we have seen a very nice top here with the risk index overbought, and it is not correcting down. We believe it's only a matter of weeks until it actually reverses. The hourly has had a nice first move down, which has seen an intermediate bottom over the last few days, but the downtrend doesn't seem finished, and this should possibly weigh on the daily and on the weekly to gradually turn them over the next few months. Now, another element which is suffering from rising interest rates is gold. Gold is still in a downtrend. It was kind of an exhausted downtrend. We had 2 points of exaggeration to the downside on our risk index here, and it has had 2 very nice bounces over the last 18 months. Yet the last bounce doesn't seem to have been able to gather the steam. It actually needed to push higher, and it seems like the daily is now back in a downtrend. The risk index was indeed overbought, although prices didn't reach their impulsive targets up. And so we are now in a resumed downtrend situation, and with risk possibly below the lows that we saw last December. The hourly has had a very strong move down over the last few weeks, and also over the next week or so, should find some support and should bounce a bit towards the end of the month and into early August. But that, in essence, over the medium to long term, it's now 3 bears, and this is now the positive sign for gold over the next few months. Another element which is going to be quite crucial, and this second half of the year we believe, is Brent. At the moment, the picture is still quite negative, with 3 bears on our weekly, daily, and hourly chart. That said, we believe that it may have reached a base last year. Impulsive targets were done. We saw a very nice oversold situation, and the retracement, although strong, is only retracing about half of that move. At some point during the summer, we believe we'll find a base and oil could resume its uptrend. If we look at the daily, we're getting towards oversold, but we're not quite there yet. The envelopes are still heading quite aggressively down, and our daily chart is pointing towards targets in the lower 30s, 40s, higher 30s. The hourly brings us down to about between 44 and 42, and we believe that somewhere around these levels, lower 40s, will be a sweet spot to start picking it up. Our timing is possibly towards the beginning of August. Now finally, we look at the euro. Our view is that the euro has made an exhausted downtrend. We could see that the risk index was very much oversold at the end of last year. It reached its target and it's starting to bounce. And gradually during the year, we believe that this weekly chart will turn into an uptrend. That says it does take time and it is gradual, and the first move up was quite compelling. And we believe that this first move up is slowly getting towards an intermediate top. Targets are between slightly below 115 and above 117, 118. That said, we're slowly getting towards overbought. So our view is that over the next 2 weeks, we should be reaching the top and correcting down into the summer. That said, we believe that there's a second leg up later on in the year. On the hourly, we could see that our envelopes are starting to flatten, our risk index is in the overbought, and our targets have pretty much been reached. So we won't see very much more potential here on the euro over the next few weeks. Finally, we look at the euro stocks, and the euro stocks is still heading up on a weekly basis, and we believe there's still potential towards the end of the year. The daily is in an extended bull, but could see a last move up, and the hourly has probably reached an intermediate bottom. So as rates possibly retrace a bit into August, we could probably see over the next week or so the euro stocks bounce a bit, possibly until mid, maybe 3rd week of July. And that's it, and we wish you a very good summer, and thank you very much.